Hey everybody, I just wanted to make a weekly recap video. Now, if we're just going on CNN and we're looking at the Fear and Greed Index, right now we're basically looking at a reading of 57. So it's basically saying, hey, you know what, the stock market's a little bit greedy here. Now, if we're looking 1 month ago, this was a neutral reading of 49. So we've definitely picked up a little bit here. And going down, if I'm looking at stock price breadth, we are seeing this breadth pick up here. So a lot of people pay attention to this, and this is kind of why we're seeing all of this piling on. So the breadth did definitely get that inflection point to the upside right around the end of March. So, this could continue upwards like it has in the past, but definitely do watch for when this breadth starts to turn over, because that is when the stock market starts getting a little bit shaky. And another thing right here, if we're looking at put and call options, this is basically giving us a ratio. So puts are going to be on the numerator, calls are going to be on the denominator. So if the put to call ratio is over 1, that's essentially saying, hey, you know what, there's more puts in the market than there are calls. Right now, we are having a reading of 0.91. So that essentially means that there are more calls in this market than there are puts. So we're getting this reading of extreme greed. So now you got to be just a little bit careful, because in my opinion, we haven't seen a strong pullback from this move right now. So let's go ahead and let's jump straight into the technicals. So let me just start us off as usual with the Fed Funds futures contracts. So if we're looking at the spread between the March and the December contract, this is essentially giving us a reading of negative zero point 0.2, which is closer to negative 0.25. So this is basically saying, hey, you know what, by the end of this month, we're still looking at one price cut. So essentially, this could change big time, because we have that inflation reading, that CPI reading this week. So I don't necessarily know how this is going to come out, if I'm being honest, because, I have seen gasoline prices go up, and, I do know that crude oil prices are going up right now because of that OPEC production cut. So that could really come into play for next month. So as of now, I'm a little bit uncertain of how the CPI print is going to come out, especially the core, because, I am starting to see definite slowdowns in the economy. But, like I said, I have seen gasoline prices go up as well. And, when you do think about gasoline prices, even though you say, hey, you know what, that's pretty much non-core CPI, but it does still make its way into the economy. So it will be interesting to see how this CPI plays out. But in my opinion, it'll be even more interesting to see how the next one plays out. So moving on, let's go ahead and look at the Qs. So the Qs did something pretty crazy on Friday. Let me just show you. I'm going to go on the 10-day, 5-minute charts. So this is basically where Friday is. Now, we started the day with a gap down. This gap down, essentially had more selling into it. It took us all the way to this gap fill right here that we made previously. And then intraday, we rallied back. We filled the same gap that we created on that same day. And then we tried to fill this gap. So we did not quite fill that upward gaps. So, come next week, or this coming week, maybe Monday or maybe some other time this week, we could just go up real quick to fill this gap right here. That's very, very possible. So basically, this gap is going to get filled at 318.73. So, it's not a whole lot away from where we are right now. We're at 318.05. So yeah, that would be about like 70 or so cents here just to fill this gap. And then how price action is going to react after we fill that gap, that's going to be critical. Are we just going to fill this gap and then are we going to flush? Or are we going to fill this gap and then proceed even further like we did right here? So I'm definitely paying attention to that. Now, let me just zoom out a little bit more, and let's go back to that 10-year 1-day charts. All right, so if we're going back to here, zoom in right there. So as you guys can see, we are in this rising wedge structure, but as of right now, we are slightly above this. So ultimately, in the future, I do believe that we are going to come down. We're going to fill this gap right here. And, there is a high possibility that we could retest this trend line right here. but that is not the case right now. So, what I'm thinking about is how long are they going to keep us on this trend line? Just basically zigzagging along this trend line before we ultimately have that pullback that does fill this gap right here, and that does take us back down to this support trend line. So, that's ultimately the question here, because they could basically be squeezing out a lot of bears during this time, and they could just fake out bulls each time. So they could just take us underneath this trend line momentarily to fake out a bunch of bulls, because a lot of stop losses are likely going to get triggered, and then they could continue this on for quite some time. So that's definitely something that I'm watching. Now, what's going to help me figure out, when are we actually going to get that flush back into this rising wedge? So what I would be paying attention to is both RSI. So let's just go ahead and add RSI here. And I would want to look at MACD as well. So MACD and RSI are the two things that I really like to look at on top of my anchored VWAPs and my moving averages and things of that nature. So let's just go ahead and apply those. So right now, if I am looking at RSI, it definitely pulled back. So essentially last week, that short holiday week, that was essentially just being used to basically pull back that RSI without necessarily pulling back that price as well. So, another thing right here, if we are looking at the MACD, the MACD is starting to flatten out just a little bit. So if we do get that blue crossing underneath the yellow, that's going to be that sell signal that many people are going to pay attention to. And, that's probably likely going to be what gets us to flush into this gap fill right there, and likely what gets us to the bottom of this trend line right here. So let's just zoom in on that MACD a little bit. So as you can see, this is just kind of flattening out a little bit, but this could trick people out. This has been known to trick people out in the past. So just look at this right here. So it did look like we were going to curl underneath, but what did we do? We flattened out only to come back up again. So that same thing could happen right here. Maybe we flatten out and then we go back up again. So definitely something to watch out for. Now, when we do have that definitive crossover, that is essentially when it's going to be very dangerous, like I did mention. Now, let's go ahead. Let's move on. Now, if we're looking at the SPY, the SPY is, it's above my anchored VWAPs right here. So we were in this anchored VWAP sandwich. We're ever so slightly above that. We're at 409.19. If we're just looking at where that anchored VWAP is, it's at 407.51. We do have this 50-day and that 200-day well below that area. And if we are just kind of like looking at how this is playing out, let's just go ahead and zoom in a little bit. We still have the structure that does look like it could be, a potential head and shoulders. But, obviously if we do break above, that level right there, right around 414-ish, then this starts looking more like a double top scenario. And if we do make it above this double top scenario, let's say like 420-ish, then, maybe you might have to be a little bit careful, because that could potentially just be like, hey, you know what, maybe we're not going to have that double top. Maybe we're not going to have that head and shoulders. Maybe we're going to rally up a bit further, and then, maybe we're going to hit that 431-ish area that everyone is kind of talking about right now. So definitely something to watch out for. Now, let's just zoom out again. Let's go back to that 10-year 1 day, or let's just zoom out from here. And then let's see if we can see anything else here. Let's pull up that MACD and RSI. And let's just take a look here. So if we are kind of looking at RSI right now, it's around 60.2. So it's not necessarily at those 70 highs or whatever. And if we are looking at MACD, let's just take a closer look here. So MACD is starting to level out just a little bit here. But you can definitely kind of see that slope right there. So it was much more steep right there. Now it's kind of like leveling out a little bit. I would wait for this to just flatten out, curl down, and then kind of pay attention to what's actually going on there, because we have 3 gaps to the downside. If MACD does start curling down and it does start looking a little bit more bearish, then yeah, I think the bulls are going to, the bears, I mean, are going to step out and they're going to start filling these gaps systematically. So definitely something to pay attention to because that's going to be, this MACD right here is likely going to be what tells you the likelihood of us filling these gaps right there. Now let's take a look at VIX. So VIX is also going to be another great indicator to pay attention to right now because as of right now, VIX is at 1840. So this is pretty dirt low. So I've been basically yelling and screaming about this. Well, not really. I'm pretty soft-spoken, but I've pretty much been yelling and jumping around about this. And what I'm looking for is for the VIX to essentially get to this low 17 area, so like 1730, 1750-ish, because that is where this macro level trend line is. So I'm going to have to go on the 10-year week, and you can see right here that there is this macro level support trend line that's been around for many years. So if we do hit this level, I think it's going to trigger something. And let's say that we break below that level. If we break below that level and we have a far, far break below that level, I think, hey, you know what, maybe we can start getting a little bit more bullish, especially if we retest this level and then we reject. I think that would essentially just bring us into a bull cycle. So, you know, there's people right now that are screaming, hey, you know what, we're in this new bull market. I don't necessarily think so until I see this happen on the VIX. So like I said, you know, what I want to see on the VIX is I want to see us break below this trend line. I want to see us retest it and then reject. That would essentially be my thesis to say, hey, you know what, this is the bull market. You know, this isn't, you know, some fake Fugazi market. You know, this is the bull market. But as of right now, you know, I'm still in this camp that we are in this bear market. And I would like to see how we react if we touch this trend line right here. Now, coinciding with this is the dollar. So if I'm looking at the dollar, you know, I see the same macro level trend line on the dollar. So let's just go ahead. Let's zoom out to the 10-year week. Now look at that. You know, that's a support right there, support, resistance right there. And then you can see that we break right through it. What's going to happen when we retest this trend line? You know, is the dollar going to fire off? And is that going to cause a sell-off in equities? So that is what I'm looking for. And we are very close to both of these scenarios. We're super close to that VIX hitting that low 17 level. We're super close to this dollar hitting this area. So let's just pay attention to where this area might be. So let's go on a lower time frame. So this area could essentially be right around this 101 area is what I'm really looking at. So, you know, the dollar does have a lot of wicks and it does have a lot of fluctuations. It's very similar to the VIX in that nature. But, you know, we could essentially just have a flush from where we are right now. We're at about 102.09. We could just flush a little bit. And then what's going to happen when we touch that? That's what I want to look at. So what's going to happen when this touches this trend line? And what's going to happen when the VIX touches that trend line? And then that is essentially going to be the two biggest things in this market that I am paying attention to as of now. All right, now moving on. You know, let's just take a look at Microsoft. So Microsoft is very interesting right now because let's just zoom in right here. We're essentially at the top of this rising wedge right here. But at the same time, you know, we do have this gap right here. And if we do want to fill this gap, we can go all the way up to 295.73. So we're not too far away from that right now. We're at 291.60. So it's very possible that we could just go right above this wedge and fill that gap right there. And then we're going to see how we react from that. You know, are we just rallying right now to essentially just fill this gap right here? Or is this rally an actual legitimate rally? So that's what I'm paying attention to right here. Now, let's just go ahead. Let's pull out the MACD and RSI as well. Oops, wrong one. All right, there we go. So let's zoom in right there. So if I am looking at the MACD, you know, it is kind of leveling out, you know, right here. We are kind of losing some of that momentum. And we can see that the prior MACD, this blue line right here, it got around the same level. So, you know, maybe we top off right here and then we have that bearish crossover. Now that bearish crossover will be, I think it will result in a pretty big sell-off on Microsoft. And I would think that, maybe we could at least go back and retest some of my anchored VWAPs right around that 272 level. So I definitely think that Microsoft is something that you got to watch out for. Now, if you're going to be bearish right here, what you got to watch out for is that gap upwards right there, because that could get filled. And then if we were to fall back within this wedge, let's say we fill that gap to the upside, and let's say we fall right back into that wedge. To me, that would be a false breakout. And then if we were to get back in, that would be very, very bearish. And I think that we could essentially just go back and retest this anchored VWAP, which could basically just be that sell signal right there on the MACD. And then if we're just looking at RSI as well, RSI has been in these high levels for some time. It's been close to 70 for a while now. So, in my opinion, I think we will see that pullback in Microsoft soon. I don't necessarily know how soon because, like I said, we have that gap to the upside that still needs to be filled. And then, obviously, the RSI has been high for a while. And then we have this MACD that is kind of flattening out a little bit here. So definitely something to watch out for. Now, what about Apple? So, I got so many lines going on Apple, but, let's just see what's going on here. So Apple, we are in this rising wedge structure. We do have this resistance trend line right here. We did break above that. So, right now we're kind of in this mid area right here. So the way that I see this is we could go back up here and then we could retest this upwards trend line, which is the top of this rising wedge. Or, we could basically go back down and then we could basically touch this area, which was former resistance, which is now going to act as support, as well as this support right here as well. So we could just go back and we could touch this intersection right here. And that would be right around that 160 area. So where I do think that this would get very dangerous is if we were to cut below 156.47, but we're still well above that right now. So that is where I would start thinking, okay, this market is going to get very dangerous if we cut below that, because I think if we do cut below that, it's going to be pretty much a flush straight down to this 151.29 level. And then I do believe, that would take us below that 50-day moving average, and then we would have that 200-day moving average as support. So definitely something to watch out for on Apple if we do break below this level right here, and that is 156.42. Now let's look at Tesla. So Tesla is at a very critical point here. So I'm going to zoom in. All right, so in the past, I've mentioned these anchored VWAPs. And I mentioned this anchored VWAP as well. So this one is acting as resistance here. And we do have this trend line right here. And this trend line is support. So it was basically the bottom of this, bottom of that. And then when we cracked underneath that, we also cracked underneath the 50-day moving average at 191.35. So right now we are in this yellow chop zone right here, which is defined by this area of 175.85 to 185.13. We're currently at 185.06. So, what we need to see to be bullish on Tesla is we need to get back above this trend line right here and also back above this 50-day moving average at 191.35. If we don't see that, then, we could essentially just chop around this 178 region to this area below this trend line. So, it could just be chopping around like that. But ultimately, if we do get below both of these anchored VWAPs, so, we have this anchored VWAP right around 178.70 and 175.93. If we get below both of those, then I think things get much, much more dangerous. And by much, much more dangerous, what do I mean? I'm thinking maybe, a retest of this support right here, right around these 163 area, or potentially that gap fill right there. So that gap fill will essentially send SPY just tanking, SPY and QQQ tanking, if we were to just fill that gap right there. So definitely something to watch out for. And right here, this scenario right here, it doesn't look too good. I mean, this kind of looks like a double top with the second top just a little bit lower. So right now, I'm not too bullish on Tesla until we get back above that 50-day right there. All right, what about XLF? So, we're definitely going to have these bank earnings here soon, but here's what I'm noticing on XLF. So if I go on the weekly time frame, so right now I'm looking at the 10-year weekly time frame, there is a support trend line right here. So support, support, and then it was acting as resistance right here. We broke above it. When we did break above it, we simultaneously created this huge gap right here. And this gap is actually showing up on the weekly. It's very, very rare to have a gap on the weekly that does not get filled. This is a very rare scenario. So you guys can clearly see that when we got back above this trend line right here, we also had this major gap to the upside. You can also see that this trend line was correlating with this 200-day moving average right there, or I should say 200-week moving average. Now let's just zoom out again and let's see where we are right now. We are essentially pretty much on that trend line on the 200-week moving average. We're at 31.89 for that 200-week moving average. Right now, we're at 31.99. So here's basically what I'm thinking. I'm thinking, if we have several week closes underneath this 200 weekly moving average and underneath this trend line right here, then yeah, this is going to look pretty darn bearish. And the potential for us to fill this gap just becomes much, much larger. But as of right now, we did close above both of these. So as of right now, this is still in the safe zone, but this can easily crumble if bank earnings were to just flush. So definitely do be mindful of that. And I would be very interested to see how we close the next few weeks. Because, ultimately we do want to stay above this trend line for, things like the SPY to be bullish, because SPY has a lot of financials in it as well. And XLF is the financial ETF. It's got JPM, it's got Wells Fargo, it's got all of these banks in it. So definitely do watch out for the financial sector, because right now it's looking a bit unhealthy. Now, what about the bullish scenario? Well, right now we have this longer term trend line right here, and we have this resistance trend line right here. So what do I think could happen if we do see that bullish scenario? I think, it could just be chop going back and forth this area right here. So, maybe, bank earnings come in good, maybe we rally a little bit. Maybe tech pulls back and, we do see some more rotation back into the banking sector. Now, let's say that every now and then, we have a bank run or something, or some financial scare. Well, then, we'll have that pullback. And then, we could just chop around in this channel for a little bit. So definitely something I'm paying attention to. Now, moving on, I don't really pay attention to DIA or IWM as much, but I am going to cover them because I do want to show you a longer term trend. So right now, I am on the weekly again. So if we are just looking right here, we have this support right there, that support right there. And then right here, we did break below this. And then when we got back above this area, we did produce a pretty strong move. Let me just zoom in on that. So you guys can clearly see, this was the 2020 COVID crash. You can see we basically bounced right off this area. And then, we had that fake rally and then we flushed underneath. Now, what happened when we got back above this? Well, we retested it a few times. You guys can see that. We retested it a few times. We even retested it again right here. So now let's just zoom out. Let's see where we're at right now. Well, we had a bounce right there. We momentarily flushed underneath, but we got back above very quickly. This was a matter of, let's see, 1, 2, 3, 4, 5 weeks. So within 5 weeks, we got right back above this. And then you can see right here, we had this strong bounce off of it. So where are we right now? Well, right now we're kind of in this area right here where we did have some resistance. So I'm going to have to go back on the 10-year 1 day to show you that. So we're focusing right here. Now, as you guys can see, we had this resistance area right here, right here. This was a false breakout right there, and then we flushed. And then resistance right there. Is this a fake breakout again? That's what we need to know. Because if it's not a fake breakout, we're going to rally pretty big. Now, just look at what the moving averages are doing here. So we got this 50-day moving average in orange. We got the 200 in purple. If you notice, this 50-day is kind of curling to the downside. So there is this potential that we could create this death cross scenario if we do start falling below. And let's say that this is a false breakout. let's say we get right back into this, basically, I would say that this is a wedge right now. So let's just say that we get right back into this wedge. Well, then that's likely going to send this 50-day going lower. And then, essentially, we could see that death cross scenario play out. So this is something that I am definitely paying attention to. Now, what about on the IWM? So on the IWM, something very interesting here. On the weekly time frame, there is a death cross. So let's just zoom in on that. So you guys can see that 50 weekly moving average, the 200 weekly moving average, and then there is this death cross where the 50 weekly went underneath the 200 weekly. So right now, IWM does not look healthy at all. So let's just zoom out. I want to show you a few other things. So I'm still on the weekly time frame. Now look at that support right there. So we got support right there, support right there. You can see that when we broke this area, we flushed and we got right back above this. And then you can see it's been acting as this magnet. Now, where are we right now? Right now, we are below this. So right now, we're at 173.89. If we were to get back to this level, that would be right around 178-ish. Now, if you just look at where the 200 weekly is, it's at 182.20. If we're looking at where this 50 weekly is, it's right around 180.83. So right now we're below both of these weekly moving averages. We got this death cross. We're below this macro level trend line. So IWM does not look good. I would not be jumping in here unless we get back above both of these. So yeah, right now does not look good. So that basically concludes my video. I hope you guys enjoyed it. And God damn it, I always forget this. So let's just do it real quick. So the weekly moving averages, almost forgot again. So if we're just looking at this, let's just take a quick look. So we got all of these tickers right here. Let's take a look at where the RSI is. So right now, what is overbought? Obviously the tech sector. So, Apple has RSI around 66. We got Microsoft RSI around 69. The Qs did pull back a little bit on the RSI. It's at around 62.80. SPY is around 60. So it's not too overbought here. And that's mainly because of the financials pulling it down. Tesla. So Tesla is ever so slightly oversold. It fell below that neutral, which is 50 for RSI. So, Tesla, I did show you guys that chart on Tesla. It did not look too well, but this could quickly figure itself out. So the Tesla chart right now, it looks a little bit bearish, but, if we were to just go up a few dollars, then, that would essentially fix itself. So as of now, Tesla is slightly oversold. I definitely be a little bit cautious, go back, look at my technicals on Tesla, and then, basically I explain what you would have to see to be a little bit more bullish on Tesla. And NVIDIA, the RSI did pull back a little bit. It's still slightly overbought. Now, I know everybody's just basically trying to short NVIDIA to death and they're all getting screwed. So, how long is NVIDIA going to continue upwards? I have no idea. But when NVIDIA does flush, that's going to be the biggest sign that, this market is essentially going to turn over for a moment. I do think that we are due for some sort of correction here. Now, if we're looking at Google, Google did have a pretty nice rally. So the RSI is picking up a little bit. It's at right around 68. So it is getting in that slightly overbought area. Meta is definitely starting to get overbought. It's been in this 70 area for quite some time now. Now, I do know that there's all this banning TikTok hype and whatever. So as well as pretty much job cuts, which seem like every single week. And it seems like almost every other day there is a freaking analyst giving a massive price target upgrade. So, as of right now, if I'm just thinking about the overall market scenario, I don't necessarily think we're just going to crash anytime soon, because right now the analysts are essentially preventing that from happening. They have all these crazy bullish outlooks. So it's when we start seeing that sentiment change in the analyst community, and we start seeing more analysts doing massive price cuts, that is when I think we're going to see our massive crash. Because that is what happened in 2022, And I am looking for something like that to happen maybe in the latter half of 2023 or maybe 2024, where we do start seeing these analyst price target cuts. So that pretty much concludes my video for sure this time, and I hope you guys did enjoy it.